Valens Research, Uniform Financial Analytics.
American Tower is a super interesting company because really, if you understand what's going on with 5G, there's an argument to be made that 5G investment is actually not going to be beneficial for Verizon or AT&T or anyone else has to invest in it, because it doesn't actually mean they can raise prices, but it is massively more intensive in terms of the number of cell towers they need to actually have up to be able to provide 5G service versus LTE. But guess who does win if you have a ton more cell towers that need to be placed all over America and all over the world? The person who owns the towers. American Tower is the person who owns the towers. Now, if you were looking at the as reported metrics for American Tower, you would look at this company and you'd say, hey, this company has had phenomenal tailwinds for the last 10 years as we've rolled out LTE, as they've expanded internationally, because a large part of American Tower's business is international. And as American Tower should have benefited because of the fact that they were seeing growth in these places as they were investing. Meaning, the way to think about American Tower, how do they make money? They build a tower, and as more cell nodes get placed on that tower, they charge rent for those cell nodes. So more nodes means more revenue for American Tower. You build a tower, as more nodes are added, you should have a higher return on that tower over time. You look at the as reported metrics, right? I just turned off the uniform accounting returns for American Tower. You look at those numbers and you'd say, wait, American Tower hasn't had any benefit from this entire secular move that we've gone from 3G to LTE and now 5G, and also the expansion and growth overall in terms of density of cell towers. They haven't benefited at all. Look, returns right now, they were at 5% in 2011. They're 5% now. Literally nothing has changed. This business has not benefited. They had a great run from 2004 to 2010, but since then, nothing has happened. In reality, though, when we look at the uniform accounting numbers, all of a sudden something becomes clear. American Tower hasn't been a stagnant, low-return business. They've actually benefited massively from the expansion in LTE and the density of cell towers and their international investments. Returns that were 7% in 2007 rose to 9% in 2010, rose to 12% by 2014, and are now at 15%. This business, as they get more density, is seeing returns expand, and as returns expand, the market's rewarding them. Look at this. Right? If you were looking at the as reported metrics for American Tower, you'd say, why on earth is American Tower's price rising over time? They're not doing anything. Returns are flat. When we look at the uniform accounting data, it starts to make sense, right? And this is what's so important. You can't use as reported accounting metrics when you're trying to analyze companies, understand what the stock market's thinking and understanding where it's going to go, because they give you the wrong signals. But when we look at American Tower, all of a sudden, these lofty expectations, this company with a 36 times uniform accounting PE, it makes sense for it to have that kind of valuation, because what the market's pricing in right now, right? Remember, these white bars are what the market's pricing in at the current valuation. If the company delivers on these white bars, the company's fairly valued right now. If the company can't deliver on these white bars, the stock deserves to fall. Look at this, we can say, yeah, 36 times multiple expensive, but all the market's pricing in is for a company that's growing at 10, 12, 15% a year the last couple of years to only grow at 7% a year, right? To slow down its growth. And also for a company that saw ROAs expand from 9% to 15% over the last 5 years, to then just see it grow to 23%. Basically do the exact same thing that it has. Market expectations are not unreasonable for American Tower. Now, does that mean that you need to run out and buy American Tower right now because of this? No, but it says you shouldn't short it, because what the market's looking at here is totally reasonable. The market's expectations are for this company that's expanded returns almost every single year for the last 12 years to just continue to do that. You wouldn't see it if you were looking at as reported accounting metrics, and you'd probably lose money if you invested on those as reported accounting metrics.
Valens Research, the world's leading source for uniform financial analytics.